Hello, good morning. Welcome to another ESP to trading stream. It is 8:55, Wednesday, May the 10th. CPE, CPI, CPI was released. We have released the CPI. We have an extraordinary amount of inventory here. Inventory getting short here. Notice how yesterday's overnight POC was not revisited, kind of prominent POC. The market took or closed the distributions yesterday, but then it took the upper side. Yesterday, the market opened with a gap, closed the gap, get into this distribution, but didn't travel to the other side. By the YPOC though, the YPOC, and the overnight also same POC as the regular trading hours. And market was being sold mechanically from this level here, which now is this day low. Okay, a mechanical low here. It's a mechanical level to be a seller from my point of view. And you know, the market has become unbelievable long now. All the shorts from this day have been squeezed. Very very weak inventory here. Notice what we have here. Notice how many periods were bought from these levels. One, two, three, four periods. Four wide. Let's wide that one here. It's incredibly weak this. I mean, the market can make a new high, but the who is carrying the market is unbelievable weak trade, short term trade, very short term trade. You know, there is a tremendous amount of weakness. I got at home. Well, I got that observation from yesterday. You know, the market didn't. It was very uncertain. I guess let's see if I can get this. And there was potential for a firecracker effect here, firecracker effect here, even firecracker effect up here. The market didn't get up to here yet. The market took this high out. These 2 days and this one. I don't think this one yet. How much is this? 41.67, something like that. What is it now? Wow, very close, huh? Kind of like right there. And then we have a gap. Actually, the market did take this high. This high it hasn't taken yet. Yeah, one, two, three, four. One, two, three, four. Yeah, it has taken this one. Yeah, and there is accumulation in inventory here on the lower side. When the market make a new high here, there are unbelievable inventory down here as well within those two ends. Potential for firecracker effect here has played out. So this one, boom, boom. Just forget about this now. It's irrelevant. Notice how weak this level is. How tremendous amount of wins we have below this one as well. So the possibility of having a whipsaw today, um, I, I, I guess I had that on mind before this number. The inventories, weak inventory here. This is more relevant than this. This is kind of too far back, and this one as well. Well, this is what we have yesterday. Um, Unbelievable 28 balance, 28 month 20-day balance here. Market between two gaps. One time frame higher ended here. It's a very uncertain market. The low is weak. This low is weak. There's nothing here holding the market. Short cover rally here, and now this huge spike to the upside. The market has an unbelievable gap now. Can you see how much? Just imagine what's going to happen when the market opens to this trade. To the traders that were going lower here. All of them are being squeezed out now. There's a huge squeeze, short squeeze going on right now. There's going to be a lot of rebalancing, and again, my level to observe is 41.50. This non-revisited is non-revisited overnight POC. Is history now. That's history. And if the market opens up here, this is going to be history as well as this one and this one and this one as well. Very wide POCs though. Wide POCs tend to attract the market. I believe, on top of what, okay, we were seeing, we were talking about this here. On top of what we got here, come on, right. I guess I'm doing it. All right. From the monthly, we were talking about this level so many times, the 4140, which is the level where the market was, which is this level here. Right? We got a weak high here, weak high, triple high here, right? Which is the market high for the above 4200. Odds are that this high is going to be taken, and the low. You got we have 13-month range here. High is weak. High this range. We got 1, 2, 1, 2, 3, 4, one range breakout. Now we have 1, 2, 3, 4 range, weak high, and 2-month range. Also, this low is very weak as well. So there is tremendous amount of uncertainty on both sides in the monthly. I'm not changing the monthly relative to yesterday. No, I got another whatever. Whatever direction the breakout, the opposite side will remain weak. The weekly, and the weekly, 5-week balance range, 1, 2, 3, 4, 5-week balance range. The breakout of this range is going to be, the longer the market stays in balance, the more dynamic the break is. The market hasn't break out the range yet, right? Because the higher the range is the higher the 2-month range. The lower the range is the lower the 2-month range. The market is traded inside this range. It's a huge upside, but the trade is inside. The market may have got too long here. I need some relief here. We talk about the daily, and the market kind of like at the center of the range here, very center in this range, which is which is this range here. As a matter of fact, the market was bought from the center of this range, from the center. Can you see? That um, tells me that the next time frame that is in the market is very active now, which is the daily time frame trading. Um, Short-term inventory gets too long or too short, then immediately the daily the daily time frame take notice and proceeds to liquidate the longs or force or squeeze shorts, right? You can see that pattern is repeating over and over and over and over. There's a negative view of the market or the street. Everybody thinks the market there's going to be a recession, the market is going to go to zero, fa, fa, fa. Um, in the meantime, nothing is happening really. Just trading money here. Just trading money, no investment money, no big term money. Most of that money, most of that, those participants are on the side. And because if somebody is going to be long, is going to get long some, listen, nobody's interest. Nobody's interest to do this, right? No. If you are going to go long, you want more. You want to place um, your position as your entry points should be as close as possible to the fine. And this is unbelievable. The average here is this is not. It's just trading money here. Notice how there's a huge amount of volume here at 50 here. You know, this is the market preventing a break here, a collapse of this. It happened when the market took this high. Notice how there's nothing here. There's some. This could be taking traders. This could be hedging a position. You can see the volume started to appear here, but here nothing. And the 50. Notice how the 50 has a huge amount of volume here. All right. And that actually coincides with what do I have here? I got this mark here, this huge mark here. This is between the 41.48 and 41.50. I'm going to keep this area highlighted. From May 5th, from this day, they have a huge amount. And now, let's see if I can add. No, I cannot add this. I need to erase this. And this happened after market hours. And now it's in the pre-market. 48.50, 50. Let's add another one here. Okay. I'm going to add, because this is one big thing here, what to carry. It's not in the pre-market. Okay, got this one, pre-market. Oh, I guess better. Let's see what else I can do here. Instead of doing that, I can put another line here. And this one, I'm going to change it to label. I want to go this. I want to do this. Oh, left. There you go. Alright, I think that's better. So I can differentiate. And just as a reference, uh don't give more value to this than what. Now, the most important thing is overlay. I mean, inventory is super long here. Crazy long here. This could be a liquidation. This could be a liquidation of this inventory at the opening during the day. It's too much here. It will be unbelievably long here. Now let's see, the market has a gap here. This has a huge gap to the upside. There's a gap to the downside. See, the market crosses the gap. If the market crosses the gap, it can target it can target high. If that happens, we may have a new high today. It would be um, relevant to see if that high new prices are rejected here. Higher prices, how the market deals with higher prices. This rejection here, but the body just dry, but that was not rejected actually. Uh, let's take a look at the other what's happening the other in the market. Crude oil, short covering mode, is in short covering mode. A small gap here, high. The same thing that happened here is happening here now. Good also, this market keep going to the upside. Dollar is falling, is low. Bonds are recovering. Gold, look at this. Look at gold. What's happening with gold? There's a divergence here. Divergence. Hmm. Well, this market, this gold is very weak as well. Continue certain 4170 would be somewhere around here. Rejection here. 4170 puts the market up here very close to this highs. One, two, three, four, five highs, including today's including today's high. Mm. One, two, three, four highs have been taken out here in this market. Very, very uncertain markets. This is characteristic of short-term trading. Very, very short-term trading. There's a tremendous amount of craziness in here. Now there's a huge gap here. If the market is going to sell the gap, if the market is going to close the gap, the selling appears right, right at the opening. If that's going to happen. Now I'm going to go ahead and remove this, remove this. I want to keep just a week. Got yesterday, 1, 2, 3, 4, 5. Come on. Hmm. It's unbelievable short squeeze going on here. I got too much days here. Wow. Mark is going to take this high as well. Remember this remember from the homework, we got this, very weak inventory also, overnight inventory here. What kind of trade have you done? These options here, the 4150, before the market, before the CPI, those were nine points. Kind of like a good amount of risk there. A little bit too expensive. Uh, Now, I mean, this you can see this kind of opportunities, right? We have these opportunities. Very hard. The risk is high because it could have gone the other way also. What number was? The number, the expectation, the number was, I believe, zero point 0.4, forecast for point point 0.4, and the number zero point 0.4. So what is there, right? There's nothing. Everything is already in the market, because that was the expectation, that was the forecast. Market already priced that, and look what's happening. Right? There's an unbelievable short squeeze here. There's unbelievable short squeeze. And not another thing I would like to point out, right? Was remember where it is. I guess I could close this. Let me close this. The volume, you know, volume here lower than yesterday. So whatever was happening, there was nothing in there. Also, but that's not the thing I wanted to show. I guess there's a lot of compressions here in this market. Traders are getting too confident, I believe, or investment, whatever. Notice the amount. Oh my God. Notice the amount of volume we have yesterday in the ES market. You know, coming from 2 millions here last week. The market make a new high and start lower, 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 lower. Less than a million. That's um and the ES is not it's completely different than a stock, right? Because it's an index. And the ES is a broad index, it's an index that have 500 companies only. And one of the uses that the ES has is to hedge portfolios. And when there's low volume there's no hedging going on. No hedging. So, well, these days, these big hedge funds are going to be caught and hedged, and there's going to be there could be a big break here. That flash hasn't happened, didn't happen. Everybody's waiting that to happen for that, but it's just not happening. So you cannot, or we cannot try to up from the market because we don't know what's going to happen. Now, notice you got 1, 2, 3, 4, 5 days here, right? But where and being bought from this level, absolutely big level, you know. You got a gap high, 4100 up here, and I don't like this to begin with. But notice where everything started. Can you see this? Exactly, exactly to the tick. This day held back. Yeah. So Anything that happens, there is a tremendous amount of weakness in this market. The market is super rich, unbelievably weak, right? We have seen that on the daily from our bigger time frame charts. We got this unbelievable weak here, weak here, weak here, monthly, weekly, daily. There's nothing supporting this market. There's nothing. The market can come all the way down to here or to, 30, to the 3900, and there's nothing there that will prevent that to happen, right? However, that's not enough reason to go short, right? Because the selling is happening also in a, in a way that that can tell us that the selling is not there's no real selling here, just short term, just day traders. Let's put it that way. Day traders are short in the market. That's the only thing that's happening. There's no big money short in the market. There's not a serious selling here. This is just going, the market is going from long liquidation to short covering, back and forth, over and over. Market is going to open very soon. Inventory, overnight inventory is unbelievably long. Counteraction to overnight inventory is, or would be, break. I wanted to do something, I don't know what. Oh, I need a second, please. Oh, another thing from yesterday is that I mean, I don't like I absolutely don't like this rally. There's a terrible, tremendous amount of weakness here in the low side. Take a screenshot of this. So I want to highlight this thing here. for 150. And I'm going to put that in my homework. Just like a side note. Yeah. Just that. Just that. This doesn't matter. Okay? There could be something. If the market, the ability of the market to hold this level here, the 4150, is, I believe, it could be what determines the market is going to break or can keep the rally. The odds are, if you have a, you know, my guidelines are, if there is a gap, go with the gap. No, just go with the gap. If the gap is going to be closed, usually happens right at the opening. If the gap is not closed, Now, the first thing, the market didn't take this high to begin with. The market now has re-entered this range, then has re-entered this one. What's the next one? This one. What's the next one? This one. Mhm. The, the weakness of this, and this is something that I'm going to carry on. This one here, this left for a while low here. Why? Because I also have another one down here. This triple intraday low, triple, three white low. Just put solid here, three white low here, and now four white low here, right here, gap here, another gap here. The trend is to the upside. No? I mean, the downside trend has ended. It could have been established, no? Because the market is going to open above yesterday's high. The trend that was has the potential to be established here has ended. Right? There's no more. The craziness on this market is it's just sign of short-term trade. The market is opening, or is going to open inside the spike. Let's see how long it takes to show me. The market is open now. Alright, market is open. Selling from this high is not a good selling, not a good level. Low odds remain Huge gap here. This one is gone. This one is gone. As we talk. This would be the gap low. All this inventory from these days is being squeezed. Hold. If you are short, what do? You buy, right? This high has been taken out. This one has been taken out as well. My interest is in the market repairing this low here, this high, my bad, coming from South POC here. Oh boy, look at the volume. God, the opening volume is, gosh, you know, if there is something serious to the upside, I will have an opening kind of like this one, for example. Previous day here and today here. And look at what it is, just right there. Right? The tone of the day is to the upside. The trend is to the upside. There's a huge gap here. Why I would like to short the market? Just because it's too high? No, that would be like stepping in front of the train. The first thing, the upper side is overnight high, followed by this weak high. The market has a good opportunity to remove this, to repair this high, and even maybe close the gap. The low, this opening is a lower. Okay, as well. It failed. It failed by a tick. This is interesting here. Let's put this one. Look, it's trading around this high. Came back to half back here. It's coming back to the opening. There was a okay, it was a good amount trading here. Now here, you notice how easy it got through this. It repaired this high. There was a weak high. I mean weak low. What the market does now with this? Can the market close the gap? That would be a really, really good selling there. Significant selling if the market closes that gap. We have 8 minutes into the period. Hmm. This market could be heading to 41.50 here. Significant amount, significant distance traveled by the market now. Oh, when I was unbelievable long here. Market has reached the 41.50, which is this high volume here. Very close to close the gap. Yeah, I mean, it's unbelievable. This is the market has closed that gigantic gap here. It's a 40. We can take this 41.30. Unbelievable, man. This is a good amount selling here. Great selling here. Now, notice where the market has been bought from March high. If this volume keeps, we are half into the period. Volume is more than half. Would end up here. The market, this is unbelievable weak market, man. The market has closed the gap. Can you believe this? That gigantic gap was closed. That's a weak market, yeah. Hmm. All of the spike, the whole spike has been retraced. The whole spike has been retraced. Okay, we enter this range, this one, and this one. Destination, the potential destination here is actually this opposite side. And now you got this 1, 2, 3 day range. Market, look above this range. No, no, let's check the other one, right? What is the destination or trade? A market that looks above the range and falls back in the opposite side of the range. I think the potential destination could even be this one, 1132. I mean, or this part of the now is coming to sell, buying from hard back here. I mean, for POC. That's not a good low there. Exactly overnight POC. That's not a good low. Next thing that where area where this market can have some issues is here at last of sale, which is very close to this low, this four white low here. Some buying can appear here at last or sell because this is POC right here. I want to see what happen here, spike happens when this POC is taken. That would be an out. Also notice how this is a high volume area as well, 31 here. From May to seems like volume is going to be about the same. Not that much of it. Just trading money here. There's a lot of buying there. There's a lot of buying there. 41, 40 actually. Where's 40? Up here. I think the movement has come in. It's close to the downside. My movement is kind of it's very close to an end here. There could be some rally here as soon as the next period opens. This low is not good, but the market went up from too long to too short almost immediately. Is that low is taking too much time to be taken. This is getting very dangerous now. Yeah, actually there's a huge volume here. These two, there's blocks here, very high volume here. There could be a short calling here. As soon as this POC is taken. Very, very absolutely weak level here. Look exactly that POC here. Come on, man. Do we have a buying tail? That is this question. We have high volume here, high volume here. The market can very well end in this area. Okay. Um, I just take a short, short long there. I get out. I actually have a put down here. It's almost free now. I went long when the market took the 41.50 with futures. Now I'm out. Now the market is forming an inside bar here. The market is forming an inside bar here. The market went from too long to too short. Now an inside bar. Can this bar? The question is, can this bar mm, remain as an inside bar all the way to the end of the period? 41.80 was 41.80. Oh, oh, oh. Very mechanical sell, buying, selling, buying, selling. Why did I put this bar here? This line here. Oh, it was low, it was K low, right? There's a high volume here, high volume down here, so and above this one we have this mechanical high. Below here we got this mechanical low. So which one is going to market? Is the market going to deal first? 'The market is very weak. The weakness is just impressive here. The weakness in the lower side, I mean here. Huge amount of volume, and it's exactly from POC here. In the same way how this day was sold from POC, right? Was still sold from POC, but notice how long it takes for the market to take care of that, uh, for the market to take care of this label. The same thing can happen here as well. And that is a very weak level, but it's not necessarily the market will take care of that level today. All right? There are good odds that can happen because all of these shorts have been removed now already. And there is some big longs here, very very weak longs here for white long here. Below here as well as another one, but it's too far. That's too far. Inside bar. The play from an inside bar. If the market closes this period as an inside bar, the trade would be go with go with the breakout for the buy, right? All right, it is 10:10. Unless there's any questions out there, I'm going to call it a day. I believe the trade has been completed. Most of the inventory, the short inventory has been removed. If the market has something to deal with, I believe it's the long weeks from yesterday, um, from what that would be from 5.5 as well, or 5.4. But it doesn't happen. It doesn't have to happen today. All right. I wish you guys a good rest of the day. Stay safe. See you tomorrow. There won't be a market update today. All right. Stay safe. See you. Bye bye.